Hey folks, welcome back to the channel. This is Jason, certified financial planner and host of Fighting Words Financial. And today, let's talk a little bit about SoFi, which has been one of the stocks that I talk about the most in my channel. And let's just say that this stock did not have a good November, and it is not having a good December. It's down more than 30% off of its highs, or I don't know, right around 30% off of its highs. So let's talk about this and put this in context with other fintechs that are out there that are publicly traded right now. It's not just SoFi, guys. They've all gotten hammered in the last couple of months. I'm talking Square has, I'm talking PayPal has, Affirm, Upstart, and a number of other companies that are out there. There's just a general downturn when it comes to these fintech stocks because of the perception that a rising interest rate environment or an environment where we have increased inflation is going to be bad for their business. So in the short term, it could be bad for the business as it raises their borrowing costs, right? And it raises their cost for short-term capital. In the long term, though, and this is why this negative view of this interest rate environment is actually really short-sighted. In the long term, though, you see this increased spread between your cost for capital on a short-term basis and what you're paying on deposit rates versus what you're getting when you loan those funds out on a long-term basis. So it'll take a couple of quarters, but you will start to see this reflected in almost all financials. And if you go back and look through history, during periods of rising interest rates, financials tend to do very, very well. Now, other than that, there hasn't been a ton of SoFi-specific news out there that caused the stock to decline until 2 or 3 days ago when rumors bubbling around a settlement with a lawsuit involving RenRen, formerly known as the Facebook of China, and somehow SoFi stock was involved here. And let's talk about that for a moment because that is widely being misinterpreted. And in fact, the moment that it was announced 2 days ago, or maybe it was yesterday, that the $300 million settlement from the former RenRen executives and the investment company involved, that $300 million settlement was rejected by a judge, SoFi stock plunged by almost $1.50 or something like 15%. So that is wildly overblown, and let's talk about why that is. So let's review the article here. They call this the SoFi battle that won't go away, but this actually doesn't involve SoFi, their business at all. It involves someone who was formerly on their board, who was also the CEO of RenRen. So as you noted before in my video that I made, and I talked about, not sure I actually made a video on this before. Anyhow, Joseph Chen was the CEO of RenRen, and he was actually briefly on the board of SoFi, and his company RenRen, which was once a very powerful social media company, started to fall apart when WeChat and a number of other social media companies in China started to really chip away at their dominance. And they became something of a venture capital firm, but then it gets kind of sketchy after that, right? RenRen's primary business, which was their Facebook-like platform, really fell apart. And the rise and fall of RenRen is fascinating because of the sketchiness that happened afterwards. The Chinese government started blocking Facebook in 2009. And RenRen executives just sort of assumed that they were going to be the Chinese Facebook. And by the end of 2010, they were claiming that they had something like 100 million registered users. And I think we all know that there's reason to believe that was false. They went public in 2011 on the New York Stock Exchange. I'm pretty sure that I ended up buying stock in that company when it went public, ended up losing money in that company later on down the road, but I don't really remember. In fact, I'm almost sure now that I did lose money on that. Like I said before, though, Tencent, WeChat, they began to grow. They started to take over the market, and RenRen started to look a little bit more like MySpace rather than Facebook as time went on. And to salvage the company, the CEO, Joseph Chen, and the board turned RenRen into that venture capital firm, like I said before, and they used that IPO cash to invest in outside companies. And one of those companies was, of course, SoFi. They took a stake that was nearly 15% of the company, and Chen himself had already personally invested $4 million into SoFi in 2011, and his LinkedIn profile today actually still indicates that he sits on the board of directors, although SoFi's website doesn't currently list him as a director. So in 2018, after a couple of attempts to take RenRen private failed, and buyout offers failed for shareholders, nearly all of RenRen's investment portfolio was spun off into another company called Oak Pacific Investment, and this was controlled by Chen and a couple of his close cronies. A group of RenRen investors, shareholders at the time, revolted and basically said that the assets that were moved into this portfolio were drastically undervalued, meaning Chen and Associates actually paid money to RenRen for those assets. They moved into this new portfolio. It appears that they bought them at a discount, like a criminal discount. They moved into that portfolio, and very quickly after that, they sold that portfolio at an inflated value. So, for example, the SoFi shares were estimated to be worth, at that time, even though they weren't public, close to $500 million. And they were sold, RenRen sold those for about half that amount to Oak Pacific Investment Company. And that's where the lawsuit comes in. A group of RenRen investors sued Chen and his associate David Chow in the New York State Supreme Court. And that suit was still going on, and they attempted to reach settlement a couple of days ago. Now, as in March of this year, as SoFi was prepared to go public, they were named as a party to the lawsuit, as a defendant to the amended version of the suit. Now, that doesn't necessarily, I'm not a legal expert here, so this is, of course, like not legal advice, but they're named as a party to the lawsuit, not so much as a defendant, meaning that they're not defending, they haven't really been accused of doing anything wrong, but they're named as a party to the lawsuit, almost certainly for discovery purposes, meaning if you're named as a party to the lawsuit, you can subpoena SoFi, you can ask for emails, you can ask for records, and all the things that they need to prove that Joseph Chen and his associates actually bought these shares from RenRen, these SoFi shares from RenRen at an artificially low discount, moved them to Oak Pacific Investments, and then sold them at a greater price. So this got a little bit of traction on way back in August, when a representative named Sherman sent a letter to the SEC calling SoFi's entry into the stock market, their IPO, troubling. That letter was overblown as well. No one's alleging really that SoFi did anything wrong, and they're not a party to the lawsuit. They are a party to the lawsuit, but they aren't a party to the settlement, and let's go over that. Now, this settlement was rejected by the judge. That means they're going to go back into arbitration or something like that, and they're gonna come up with a new number. But Reed and Collins announced a $300 million settlement in the RenRen derivation litigation, benefiting minority shareholders, which is a lawsuit saying that you move these monies to Oak Pacific, and then you and your cronies benefited from it, and you actually screwed the investors of RenRen. It involves SoFi shares, but it doesn't really involve SoFi as a company, right? So Reed and Collins, they sue a lot of people. I'm sure if you've held stock in a number of different IPOs and startups over the last 10 years or so, you probably received a class action lawsuit notice from them at some point. They tend to do a lot of this business. So this is what Reed and Collins founding partner William Reed said on the resolution of the RenRen litigation. This is extraordinary. This is an extraordinary result by any measure. It's rare to settle a case for more than the damages that we originally pleaded. Yet, indeed, from the vantage point of minority shareholders, we've recovered more for them in this direct pay settlement than the damage complaint we set forth, or than the damage claim we set forth in the complaint. Obtaining jurisdiction over these foreign defendants was no small task. Now, they were able to do that because the state of New York actually froze something like $560 million of RenRen's assets way back in 2018, put them into an escrow account. If the funds had been moved offshores to the Cayman Islands, that never would have happened, really. Or if they hadn't had dual registration here and in the Cayman Islands. But they were able to make a case with that through a thorough presentation of Cayman law and U.S. law and establish the facts of the case, and they forced these former RenRen executives and Oak Pacific Investments into a settlement. So this, like I said earlier in the video, it involves SoFi shares. SoFi was named as a defendant in the lawsuit, probably to facilitate discovery, meaning now they can go to that company and ask for the records, and they have to comply or be held in contempt. SoFi said that they were going to fight any allegations that were made against them. There haven't been any allegations made against them. They were correct in their estimation that they didn't know how much time or resources it was going to take up. But SoFi was not named as someone who has to pay out. It was Oak Pacific and Joseph Chen himself that were going to have to pay out on this settlement. And any future settlement of this lawsuit is probably not going to involve a payment from SoFi itself. This is much ado about nothing in terms of SoFi. It has everything to do with Oak Pacific Investments and Joseph Chen. Not a reason really for the stock to crash. I see this as a buying opportunity, and if I didn't already own so much SoFi, I'd probably buy a lot more now. I may buy a little bit, just trying to lower my overall entry point and cost for those shares. Anyway, folks, just my opinion. Feel free to disagree with me in the comments below. I'd love to hear from you guys. I'll see you next time.